I mean, I'm probably the least stressed person I know. It is October 31st. It is a Thursday. Tomorrow, in a little bit, it's going to be the 1st of November. And it's going to be a Friday, which is when you'll be seeing this probably. This is the video log. It takes 30,000 to a million. I am sitting at an all-time high. It's just a little bit above what it was in the days prior, but actually it went up quite a bit overnight. And then, of course, the options equaled everything out. And now I'm sitting at 73,000, almost $900. And I'll take you through the account in a little bit, but what I want to talk about after that is something interesting that happened to me, which was I went to Panda Express, and that's the end of the story. No, it's not the end of the story. I went to Panda Express and I opened the fortune cookie, and it's very fitting that this is what came up. Can you see it? Maybe not. Why make it? It says make it. Oh, maybe. Oh, for a little bit. Make it a win-win. Let's see if it'll take the whole thing. I don't know. I don't know how this works, but it says make it a win-win. There we go. For a moment there, it wanted to take it. Let's see if I do this. It says make it a win-win situation. All right. That took an awfully long time. Um, if I was any good at editing, I'd probably edit that out. But anyways, and it's funny that this came up because that's kind of the whole approach. Maybe I will edit it. I'll try editing, guys. This will be the only one and only cut because that took forever. Um, that is kind of the no, I won't. I'll stay true. Raw. Keep it raw. You know what I mean? So make it a win-win situation. It's kind of like my philosophy for everything. Well, one of my philosophies, but one of the main ones is, I try to make everything a win-win situation in life, period, not just with trading. Um, a lot of things I believe in are win-wins, right? I believe in things like trade, obviously, because a trade is, uncoerced trade, is a win-win. Okay, so for example, I have $5 in my pocket and the store has whatever it wants to sell me for $5. Some kind of stock, I don't know, glue. And I really need glue. And so what I'm gonna do, excuse me for a moment, is that's my heater, my Dyson heater. Pretty sick. It's got this app. Anyways, let's not turn this into an advertisement. But so let's say they have a glue and they want to sell me the glue for $5 because they have a bunch. They stocked up, right? They anticipate people that are gonna want it. So they don't really want the glue. They just want my $5. But I need the glue because let's say, for example, my high fidelity sound absorbing panels have been falling off of my wall. Is that a true case scenario? Maybe. So I'm willing to, exchange that. So I win because I get the glue, and they win because they get what they wanted as well, which is $5, right? So because value is subjective, that's why trade works. All right, that is why trade works, because value is subjective. If value was so objective, then there'd be no trading at all, right? You wouldn't trade one object for another because everybody would value one object over the other. And that's kind of one of the big mistakes I see people in life doing is they try to impose their own value on other people's value system, right? So, for example, I ran into a person who's like, oh, you have the iPhone 11, that's so expensive, useless. Why would you spend money on that? It's like a grand, and whatever. I'd never spend any money on that. But then I'm like, well, okay, well, what do you spend money on? And they're like, oh, well, I don't know. The most expensive thing was like a $10,000 vacation they took just recently. I'm like, well, I mean, okay, so you may not want to spend money on a phone, but your experience just costs you $10,000, and you don't even have much to show for it. Expect the fact that maybe you're in a better mood, right? So you could knock other people's value systems, but it's really not. It's totally irrelevant. That's theirs, right? It's their money. It's their life. They've spent their time and effort and energy into earning that money, and they can spend it however they wish. So, from your standpoint, everybody else's money decision might look different and silly, and your decisions might look silly to them. So, anyways, because value is subjective, that's why we're able to have these win-win scenarios all the time. And I want my wish is for every interaction to be a win-win scenario, and that goes very deep philosophically. But this isn't a philosophical vlog, so I'm going to just move on with trading and just like even like poker, for example. Not poker. Let's say blackjack is very similar to trading in a way. Is gambling, right? To gambling. Remember that video on gambling, investing, and speculation? If you want to go back and watch it, I recommend it. Blackjack, even though you know that you have a 48% chance of winning and nothing more unless you count cards, right? Then you're basically valuing your 48% chance of winning plus the entertainment that you get for more than you're paying, more than that 2% of your money, right? So let's say you come out with $100 to play and you value the entertainment more than the $2 that you're likely to lose at the end of each hand on average. So that's what you're buying there. You're buying that experience. Plus, you have some chance to actually end up, winning um, if you exit at the right time or whatever. So, it all makes it worth it. The possibilities, the entertainment. So it's a win-win situation for both the casino and you. So trading is a little bit the same way. And the reason I kind of go into this gambling rant is because I did make a couple gambles with money, and mainly because I think that the markets, it's reached a new all-time high barely. It's kind of looking toppy. So and Apple's had a really big run, so I kind of entered into a couple call credit spreads, and I'm hoping that the price stabilizes from here and doesn't break through the 255 level on Apple. But it's still a win-win, is what I'm trying to say. Like, I looked at the chances, the percentages of me earning money, and I've taken the risk. And if I lose my collateral, it's worth it for me, given the um, the fact that things are going to work out with me having less profit or whatever off because of this trade and losing some collateral and whatnot. So I'm okay to live with that. Like, I'm I'm okay with this trade even if I lose the money, is what I'm trying to say. And that seeps into another area of trading, which is the selling of options, right? So when I sell an option, I'm okay with either result, whether it executes or it doesn't execute. And just like I mentioned in previous videos, that's what I'm not kind of that is what I'm looking for when I'm entering into these trades. So here's the account. I'm gonna go briefly through it. Here are the option plays that I entered into, which is Spotify, which this one's already a losing trade, and this Apple call credit spread, which is sitting about even at the moment. Now, Apple had a very meteoric rise because they beat earnings, and this is partly why the account is up. But my earnings on Apple are very, very capped at the moment. You can see how more than half of, well, about half of the gains are taken out because of the options. You can see my collateral on options is now over $5,000, and I'm officially losing on my options plays on Apple. All right, you can see that over here. So, I mean, was this whole time wasted being into those Apple plays, option Apple plays? Well, no. I figured out what the outcomes would be when I first entered into them, and I was okay with this scenario. I'm okay with Apple going to 300 and me losing out the opportunity to participate into those gains. And I'm also okay if Apple drops down below 200, really far low, because then I get to accumulate. And so that is, I'm going to be accumulating another 100 shares basically. And so I'm okay with all these scenarios. So I'm going to let them play out until January 17th, even if, gamma skyrockets and, it doesn't make sense and most people would exit out of the trade right away. I'm gonna let it run all the way to the end. Um, Possibly. No, definitely going. No, I don't know. Well, we'll see. Got to make that judgment when it comes to it. But most likely, I give myself about a 90% chance of waiting till January 17th for the options to actually expire and execute and do whatever they're gonna do, and I'll be okay with that. Now, that happened with Apple, right? Um, Furthermore, silver and gold miners have been going up a little bit. EXK has gained a 3% today, and that's equating to that equates to $50 or so worth of capital gains, unrealized capital gains, and the rest of the account is pretty mellow with the exception of uranium. You can see over here, energy fuels down $72, and Cameco is just killing me here. 171, down 171, which is a big loss. And namely, I mean, most importantly, it's really bad for me because it's dipped down under $9. And under $9, I mean, I'm happy to accumulate Cameco at 9. As you can see, I have one put sold at 9. I have one sold at 8.5. I don't have any puts. I have one for $8 here. I don't have any puts sold for $10 or for 9, or besides this one for 9. But I'm certainly having to trend down when it comes to my option selling with Cameco. I'm certainly have to factor in this downward trend over the last 3 months. And I'm not. I don't know if there's going to be another pop up like here. I was very confident that it's going to have a either a dead cat bounce or a reversal of some sort. But now I'm not as confident, and this might drift all the way down to $8 or so, and before it reaches any kind of support. So I'm just gonna play along, and I'm just gonna sell puts and calls around the $8 to $9 range. But that hurts, and that hurts my account quite a bit. I could have been over 74,000 today, as you can see in the beginning of the day before market opened. I was over 74,500 or so, and then at market open, the options corrected, and all the way up at 74,738, I guess. Options corrected my account, and then I was sitting at around 74,000 from the beginning of the day, and then trailing off into the account value that is right now, which is, as you can see, 73,900. Now, I have things sitting in cash, and I'm wondering what to do with this cash still. I have $3,600 and some collateral that I might be receiving at the end of the week as well. I have all this, and I'm looking to re-roll it into other option plays and sell some more puts. But I'm really trying to accumulate a lot of cash because the market's being very overpriced at the moment. I'm not saying it's not going to go up, but it is overpriced, and I want to have a lot of dry powder whenever the market does drop. So one of the big mistakes that I've had before, way in the past, not recently, is that I've been I've been really not upset, but I- I've regretted that I didn't have more cash on hand to take advantage of really good buying opportunities. Um, like in 2008, for example, when the big crash happened, I didn't have any cash on hand. I didn't want to sell out of what I had, and I just kind of rode it all the way down and then all the way up without accumulating anything. And it wasn't much money at the time. I was just starting out and trying to learn about the markets. And then I made even more mistakes after that. I exited at my entry point, and I didn't make any money on because I was invested in the S&P 500 at the time. But anyways, my point is that I want to have dry powder, which means that cash on hand in case new deals come along, and I'm just gonna ride this steadily and slowly up as it keeps grinding higher. I might not be able to beat the market on the upside here, might not even be able to beat them on the downside, but I am gonna beat the market up on the rebound. and that's kind of where I'm going to be making my money, and that's where my edge is over the markets. On top of it, on top of that, I might, obviously, I'm more diversified, more balanced out, let's say, than the S&P 500, so I'm going to be able to survive that. Um, because I have some silver, I have, I have wheat and precious metals, I have uranium, etc. I have some international, markets. I have Russia here, and I have emerging markets. I have some bonds, and this is this is kind of why I have these two positions here, GSY and PCY, because they're my dry powder. So I have a total of 3,600 plus, um, well, let's call it 1,700. So let's call it $5,000, and then PCY I have another $5,000 plus worth of cash, which I'm willing to convert into other things. This is emerging market bonds right here. It's actually given me back $281 of unrealized capital gains, as well as the dividends here every month. So it's actually been giving me quite a bit of money. And now I have over 5,000. So I have about 10,000 and a half worth of dollars able to deploy into whatever I think is going to be undervalued in the next downturn in the market. And I may scale into it, I may enter in some weird plays, but my point is that I'm going to have cash in hand that's not losing value, or at least that much value in the short term, and I'm able to capitalize in the long term. Now, $10,000 is not an insignificant amount out of the $73,000 account. But what makes it even sweeter is that I will have on January 17th, once the Apple options play out, I will have another 40 grand coming in from that, and then another $9,000 that I could go on margin plus that 40 grand. So that makes it into $59,000 worth of purchasing power. Now that relative to a $73,000 account is not a thing to scoff at, right? So, I mean, that's almost half of the account. And I like that. I like having those options. I mean, if things go really, really south, I want to be able to go heavier and heavier and heavier into it, instead of just, you know, um, running out of money really early in the downturn, or not having any money for the entire downturn and riding it out and just biting my nails with every single other investor or trader. So that's the whole point behind having that dry powder or stack of cash, to take advantage of those opportunities. And that way, I can make the downturn a win-win situation. I don't know. I try to tie it in there somehow. But that's all I wanted to talk about today, is that the main thing for me anyways, and I would suggest other traders adopt the same kind of mentality. Oh, by the way, if you want to see the count, this is what the week looks like. Just a little bit up on the week. Look at this nice Apple spike right here, non-mitigated by the options. This is what the month looks like. It's a very solid month. This is 3 months, 9.69%, $6,000. Year is $22,000, 44%, and all time. But as you know, I started this on August 2018. This account was pretty dormant until then, with only like a few $1,000s into it. So that's why the line looks so flat. But this is my all time. You can see since I started actively managing this, I've had a pretty meteoric rise in value. I've made $22,000 basically, or let's eliminate these $2,000 here. So $20,000 since in a little bit over a year, maybe a year and like a month. So $20,000 a year is not bad. All right, now what am I gonna leave you with? Yeah, so this is what I would recommend for everyone, is to find out what your comfort zone is, and be okay with whatever scenario happens. If the market drops down a lot, are you going to be all right? If the answer is yes, then don't make any adjustments to your accounts, right? If everything goes up, are you going to be all right? Play a bunch of scenarios in your head. The more, the better, and figure out if everything's going to be fine. If that scenario plays out, the more vision you have, the more visualization you do, the better off your performance will be, I believe, and you'll have more peace of mind and not be stressed out. I mean, I'm probably the least stressed person I know, and some people would argue I have too much money in the market. I mean, besides this account, I actually have almost everything I own in the markets. Like 98% of everything I own is in the markets. Um, some people say it's too much. Some people say you should go buy a house or something. I don't own a house. Um, you know, but I have 98% like in the markets and maybe 2% in gold. And then my phone. That's about it, right? And my phone, car, whatever. But I don't count those, right? So yeah, you want to be able to sleep well. If my account dips down 20,000 tomorrow, I'll be okay. I know what to do. I'll leverage in. Um, I'll use the opportunity to get an even more skyscraping jump into my account as things progress further. So that's my advice to anyone who wants to do this, which is invest and or trade. All right, I think I've been talking for way too long. I don't know if anything I said here is worth any value at all, but I'm just want to keep track of this account and talk a little bit about what's on my mind, and especially since I got that panda of fortune off of my fortune cookie. All right. Okay, I think that's it. Yeah, my voice is a little bit still sickly, so sorry about that. I don't think I'll be able to make a video tomorrow or Saturday or maybe Sunday, but definitely one on Monday, I believe. Okay, so hopefully y'all are making a lot more money than me. With that said, peace out.